Welcome to the deep dive. I'm so glad you could join us today, especially if you've got that learner mindset, that drive to really understand the deep mechanics of things without getting totally bogged down in just endless data and information overload.
Yeah, there's so much noise out there. It's exhausting.
It really is.
Yeah.
So let's get right into it because today we are looking at a concept that, honestly, it sits at the absolute core of why some people survive long-term in the markets and why so many others just get completely washed out.
Oh, absolutely. The washout rate is brutal.
Right. And if you've spent any time at all looking at charts or managing a portfolio or even just trying to build your own wealth over a long time horizon, you already know the mechanics. You know what a bull market is. You know what a bear market is.
The basics are everywhere.
Exactly. But what we're focusing on today isn't the math. It's not the technicals. It is the mental game.
The hardest part.
By far. We are pulling from this really thought-provoking blog post. It was published back on February 24, 2026, and it's written under the pen name The Trading Job.
Such a great source.
Yeah, the piece is titled, This Too Shall Pass, The Ultimate Lesson for Life and Markets. And the fundamental premise here is that surviving the stock market, and really surviving life, it isn't about having the most complex algorithms or some secret insider knowledge.
Right. It's not about outsmarting the quants.
No, it's fundamentally about human psychology. It's about overcoming this thing the author calls the illusion of permanence and mastering the boom and bust cycles of your own emotions. Okay, let's unpack this.
It's a brilliant angle because it strips a highly technical, often totally overcomplicated field right down to raw human neurology. The author writing as The Trading Job, they bypass the spreadsheets completely.
They just throw the math out the window?
Pretty much. They ground their entire philosophy in a piece of ancient wisdom to explain a very modern behavioral finance problem.
Yeah, the piece centers around this famous ancient Hindi saying, "You walk bhi gujar jayega," which roughly translates to a phrase I think we've all heard, which is, "This too shall pass."
A total classic.
Right, but the way they illustrate why this is the ultimate secret to surviving the market is through this old, just incredibly vivid tale. So picture this. The setup is a dying wise king, and he knows his young son is about to inherit this massive, complicated kingdom.
A huge burden for a kid.
Exactly. The ruling of this empire is going to test the young prince in some really extreme ways. So the dying king hands his heir a small, ornate wooden box, and inside are two sealed letters.
It gives him very specific parameters for when those letters can actually be opened. The father is anticipating the two most dangerous psychological extremes his son will inevitably face.
Right, the instructions are very clear. He says, open the first letter only when you have lost absolutely everything, when you are surrounded by darkness and you've lost all hope.
The absolute bottom.
Yes, and then the second letter is only to be opened when you have conquered the world, when you're at the absolute peak of your power and you feel entirely unstoppable.
It's basically a trapdoor mechanism for the ego. The king knows that absolute despair and absolute hubris are the exact two moments where a leader, or in our context, an investor, makes their most catastrophic, fatal errors.
Let's fast forward to that first test. The young king is ruling, but the worst case scenario hits. A massive neighboring empire invades. His army is routed, his wealth is seized, his treasury is looted, and he's forced to flee.
Total ruin.
Complete ruin. He ends up hiding in this dark cave. He's starving, he's exhausted and stripped of all hope. His entire reality has just collapsed around him. And in that pitch black moment, he remembers the wooden box.
The first letter.
He breaks the seal on the first letter and he reads just a single sentence, "This too shall pass."
What's fascinating here is how the human mind physically processes despair. When you are in that cave, whether it's an actual literal cave or you're staring at a trading terminal while your portfolio drops 30% in a single week, your brain's threat detection center just takes over.
It goes into full survival mode.
Exactly. It naturally assumes the darkness is a permanent, fixed state. You project your current extreme suffering out into infinity. You genuinely believe the walls will never move and that this defeat is your final reality. Reading that single sentence acts as a cognitive interrupt.
A pattern interrupt.
Yes, it breaks that assumption of permanence.
And you see it in the story. Reading those words shifts his entire physiology. The panic recedes. He realizes this misery is just a data point on a timeline. It's not the end of the timeline itself.
That's the key.
Because he no longer believes the defeat is forever. That crushing paralysis lifts. He starts to actually strategize. He gathers loyalists. He fights this brilliant, calculated guerrilla war over the next few years, and he systematically reclaims his entire kingdom.
But he couldn't have executed any of that strategic recovery if he had remained paralyzed by the belief that his situation was permanent. The wisdom of that first letter didn't magically hand him an army. It gave him the psychological distance required to see that the cycle was still moving. The bottom of the cycle is just a bottom.
Which brings us to the second test. And honestly, this is the more insidious trap. Years later, his empire is larger and richer than ever before. There's this massive grand festival, and the king is sitting on his golden throne looking out at the cheering crowds.
He's on top of the world.
He feels invincible, like a god, untouchable. Then he remembers the box, realizes it's time for the second letter, and he breaks the seal fully expecting some profound mystical secret to eternal dominance.
Of course he does.
But instead, he pulls out the paper and reads the exact same words. This too shall pass.
If we connect this to the bigger picture, this second intervention is almost more crucial. The first letter saved his life, but the second letter saves his legacy. It totally shatters the arrogance.
Qualities check.
A massive one. The realization hits him that his peak glory on this golden throne is just as fleeting as his darkest days in the cave. In the worst of times, you must keep hope. But in the best of times, you must remain incredibly humble. The cycle doesn't care about your ego. Nothing is permanent.
Here's where it gets really interesting. Because the trading job doesn't just leave this as some philosophical fable. They map this exact dynamic directly onto market cycles. The author defines the market as a breathing entity.
I love that metaphor.
It's great, right? It's not a static chart. It breathes in with uptrends, it breathes out with downtrends. It is a continuous living engine of boom and bust, greed and fear.
And our tragic flaw as human beings and as market participants is that we consistently fail to remember that the market breathes. The second we are placed in a highly stressful or highly euphoric financial situation, recency bias takes over completely.
We just forget the cycle changes.
We project the current trend out into infinity, making the exact same psychological error as the young king.
Let's look at how that first letter applies to finance, the bleeding market. The brutal bear market scenario. Portfolios are down, the macro environment looks terrible, the media is just screaming about a looming recession, and every single stock you buy seems to fall further the very next day.
Panic sets in. Capitulation.
Yes. But it's easy to read a little letter in a cave. When your actual retirement account is deeply in the red, doesn't the brain physically process that as a real survival threat? Like, how does the author suggest we override our actual biology in that cave moment?
Well, that is the core challenge. The pain of watching wealth evaporate triggers an acute survival instinct. Loss aversion is a heavily documented behavioral bias. We feel the pain of losing money about twice as intensely as the joy of making it.
Wow, twice as intensely.
Yeah. So when the market is bleeding out, investors lose hope. They experience this overwhelming urge to sell everything at a massive loss simply because they want the emotional pain to stop. They convince themselves that the bleeding is permanent. They're trapped in the cave.
And that panic selling is exactly what creates the market bottom. The takeaway from the trading job here is crucial for anyone trying to navigate these waters. Bear markets end, bottoms are formed, the sun always rises on a new bull cycle.
It always does.
The advice is to keep hope, hold on to high-quality businesses, the ones with actual fundamentals, and prepare for the reversal. You have to step back from the glowing red screen and whisper to yourself, this too shall pass.
Because if you don't, you crystallize temporary paper losses into permanent capital destruction. You sell at the exact moment the cycle is preparing to turn.
Exactly.
But as you mentioned earlier, the trapdoor swings both ways. The euphoria of a bull market is arguably much more dangerous than the despair of a bear market.
Oh, absolutely. The author warns us just as strongly about the second letter. Think about what happens when the market goes parabolic. This is the euphoric scenario. The raging bull market, where cheap, low-quality stocks somehow double in a month. You check your brokerage account and you start feeling like a genius.
That is the golden throne. That's the cocktail party phase where everyone is bragging about their returns. And that supreme arrogance breeds incredibly toxic financial behaviors.
People get reckless.
Very. Investors stop looking at valuations. They start heavily leveraging their portfolios. They take out margin loans to buy more stock because the uptrend feels infinite. They act like they are completely invincible.
They think they've cracked the code and the rules don't apply anymore.
Right. They think they're bigger than the market cycle itself. the discipline completely evaporates.
But the trading job reminds us of that classic Wall Street adage, trees do not grow to the sky. Valuations eventually matter. A correction is a mathematical inevitability, and the market has a brutal, unforgiving way of humbling anyone who thinks they are bigger than the cycle.
When the tide goes out, the leverage that amplified your gains on the way up will completely wipe you out on the way down. Margin calls don't care about your ego.
So the takeaway during the euphoric phase is to protect your profits and stay grounded. When everyone around you is taking out loans to buy speculative tech stocks and feeling like a god, you have to mentally open that second letter. Remind yourself, this too shall pass.
It's a profound symmetry. The despair of the bear market makes you capitulate at the absolute bottom, and the euphoria of the bull market makes you leverage up at the absolute top. Both of these catastrophic mistakes are born from the exact same psychological error.
Believing the current moment is forever.
Exactly.
So what does this all mean? When we distill the entire philosophy of this deep dive down, it lands squarely on the illusion of permanence. Believing in this illusion is the greatest mistake an investor can make.
Without doubt.
Think about how the broader crowd reacts. If a stock is falling, the crowd is absolutely convinced it will fall straight to zero. If a stock is rising, the crowd is equally convinced it's going to the moon forever.
They're entirely captured by the emotion of the present tick. They're getting tossed around by the breathing of the market rather than stepping back to acknowledge that every sharp breath in must eventually be followed by a breath out.
And that brings us to the mindset of the seasoned investor, according to the author. The seasoned investor, the one who truly understands the nature of the beast, sits quietly. They maintain a calm mind.
No panicking.
Right. They do not despair at the bottom, and they certainly do not celebrate recklessly at the top. They just look at the chart, smile, and whisper to themselves, "Yuwak bi gujar jayega."
This raises an important question for you, the listener. How do you actively train yourself to step outside of the crowd's emotional extremes and recognize where you actually are in the cycle? It is one thing to know the fable of the two letters intellectually.
Yeah, reading a blog post is easy.
Right. It is entirely another thing to actually remember to open those letters when your own portfolio is having in value or when your neighbor just made $1 million on a random meme stock.
The execution is the hard part. It requires a conscious practice of recognizing the macro cycle. You have to decouple your self-worth from the current direction of the trend line.
You really do.
Well, as we wrap up this deep dive, I want to reiterate the core message to you. Whether you are currently facing a terrifying, bleeding bear market that's keeping you up at night, or you are riding a massive euphoric bull run that makes you feel invincible, the secret to the trading job isn't about complex math. It is about mastering your internal emotional cycles first.
That's the real work.
It is. Because if you cannot manage your own psychology, the market will gladly manage it for you, and it's going to charge you a very high tuition to learn that lesson.
And I want to leave you with one final, unmentioned thought to ponder today, moving beyond just the financial charts. We've talked extensively about how extreme market highs and lows are simply temporary data points on a much longer timeline. But what if we applied that exact same analytical lens to our own lives?
Oh, I like where this is going.
Think about it. If extreme financial highs and lows are just temporary, how would our daily anxiety shift if we viewed our own personal skills, our career successes, and even our deepest, most painful setbacks not as fixed, permanent traits, but simply as the current trend line of a much longer, ever-evolving personal cycle?
That changes everything.
Just like the market, you're a breathing entity of uptrends and downtrends. A bad season doesn't mean you're broken, and a big win doesn't mean you're invincible. It's all just part of your longer cycle.
What a fantastic perspective to walk away with. Thank you so much for joining us on this deep dive today. We hope you can carry that wisdom and that sense of profound balance into whatever market conditions or personal challenges you are navigating right now. Remember the two letters, maintain a calm mind, and we'll catch you next time.